Hey everyone, welcome back to the channel. Today, we're diving into The Simple Path to Wealth by J.L. Collins, a game-changing book for anyone who's looking to achieve financial freedom. If you've been searching for a simple, effective, no BS guide to growing wealth and living the life you've always wanted, this is it. So, stick around because I'm going to break down the key concepts of the book and share 5 crucial lessons that can help you on your journey to financial independence. If you're ready to make money work for you, hit that like button, and let's jump in. The Simple Path to Wealth started as a series of letters from the author, J.L. Collins, to his daughter. She wasn't super interested in money at first, so Collins set out to explain it as simply as possible. And from that, this book was born, a step-by-step guide to building wealth, living financially free, and avoiding the common traps most people fall into. Key Concept 1. Financial independence is the goal. The first and biggest idea of the book is that the ultimate goal is financial independence, not just getting rich. It's about having enough money invested so that your assets generate income and you no longer have to rely on a paycheck. This is the foundation of what J.L. Collins calls FU money. It's not about quitting your job out of frustration, it's about the freedom to walk away from anything that doesn't align with your life goals. Key Concept 2. The stock market is your friend. Collins advocates for a very specific investment strategy: low-cost index funds, particularly the Vanguard Total Stock Market Index Fund. He explains that the stock market has always gone up over time, and by simply investing in broad-based index funds, you can ride the wave of overall market growth with minimal risk. Key Concept 3. The power of saving and compounding. Collins emphasizes saving a significant portion of your income and investing it consistently over time. The power of compounding, the idea that your investments earn returns, and then those returns start earning returns, can make a huge difference over the long term. It's slow and steady, but incredibly powerful. Key Concept 4. Avoid debt like the plague. Debt is painted as a wealth killer in this book. Collins warns against getting trapped in high-interest debt like credit cards and loans. His advice is to pay off any high-interest debt as quickly as possible and avoid it altogether if you can. Key Concept 5. Ignore the noise and keep it simple. One of the biggest takeaways from The Simple Path to Wealth is simplicity. Don't get caught up in trying to pick individual stocks, time the market, or chase trends. Collins argues that the vast majority of people will do better by sticking to simple, proven strategies like investing in index funds and holding them long-term. The more you complicate it, the more likely you are to make mistakes. Alright, now that we've covered the key concepts, let's talk about 5 specific lessons from The Simple Path to Wealth that you can apply to your own life if you're on the path to financial freedom. Lesson 1. FU money is your ultimate goal. Collins introduces the concept of FU money, which means having enough savings and investments that you're no longer financially dependent on your job. This is what true financial independence looks like. It's not about early retirement per se, it's about having the freedom to make choices on your own terms. If your job becomes a nightmare or life changes in ways you didn't expect, FU money gives you the power to walk away. Tip: save and invest enough to create financial independence and choice. Lesson 2. Invest in low-cost index funds. The second lesson is all about investing in low-cost index funds. Instead of trying to pick the next hot stock or chase trends, Collins recommends putting your money into a broad market index fund, like Vanguard's Total Stock Market Index Fund. It's diversified, it's low cost, and it tracks the performance of the entire stock market. This approach consistently outperforms most active investors over time. Collins believes that keeping your investments simple and avoiding the temptation to jump in and out of the market is the key to long-term success. Tip: keep it simple. Invest in low-cost, broad market index funds. Lesson 3: save a significant portion of your income. The third lesson is about savings. Collins recommends saving as much of your income as possible, ideally 50% or more. I know that sounds tough, but even if you can't hit 50%, the key takeaway is to live below your means and prioritize saving for your future. The more you can invest early on, the more the power of compounding will work in your favor. By saving aggressively, you're building the foundation for financial freedom much faster. Tip: aim to save 50% of your income, or as much as you reasonably can. Lesson 4: the importance of the FU ratio. Collins talks about a key concept he calls the FU ratio. It's essentially a measure of how close you are to financial independence. You calculate it by dividing your total investments by your annual living expenses. For example, if you have $500,000 in investments and you spend $50,000 a year, your FU ratio is 10. The higher this ratio, the closer you are to being financially independent. Once your ratio reaches 25, meaning you have 25 times your annual expenses saved up, you've pretty much reached financial freedom. This ratio is a great way to track your progress toward your financial goals. Tip: track your FU ratio, aim for 25x your annual expenses. Lesson 5: ignore market fluctuations. Stay the course. The stock market is volatile, there's no doubt about it. But Collins' advice is to ignore the short-term noise. The market will always go up and down, but over the long term, it trends upward. By staying the course and not reacting emotionally to market drops, you allow your investments to grow over time. One of the biggest mistakes people make is selling during a market downturn. Instead, Collins recommends you hold steady, or even buy more if you can. Over time, you'll come out ahead by sticking to your strategy. Tip: ignore market fluctuations, focus on long-term growth. So, there you have it. The simple path to wealth really lives up to its name. It's all about keeping things simple, investing in what works, and staying the course. Whether you're just starting out on your financial journey or you're already deep into it, these lessons can help you build real wealth and achieve financial freedom. If you enjoyed this video, don't forget to smash that like button and subscribe to the channel for more financial tips and book reviews like this. Also, let me know in the comments if you've read The Simple Path to Wealth or if you're planning to, and share your thoughts. Thanks for watching, and I'll see you in the next one.